What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we see the falling knife slowing down as we went absolutely nowhere, and we're starting to see price action stabilizing around these levels. Does this mean we're about to see a bounce in the short term? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, let's have a little bit of fun and let's go back through memory lane real quick and just take a look at my track record. Back in late December of 2021, I said SPY will top out at 481.86 before the next major correction, and while I did not nail the top to the exact dollar, I did warn you we were getting very close to a major correction. And then in June, I told you oil is reaching a peak and we are likely going to see the S&P 500 starting to rally now that we're starting to see signs of peak inflation. Early on in the bull trend, I told you tech was breaking out and that we were going to see tech leading the way higher during the next bull rally. And then I started to warn you about bear traps not once, not twice, not 3 times, not only 4 times, not just 5 times, but yes, 6 times I correctly warned you about bear traps during the entire rally. The whole entire time we were getting the bull rally, I was warning you that there were going to be trapped bears that were going to lead to a very epic short squeeze, and I continued to warn you about squeezes and traps the entire way higher. And I did tell you there would be a major short squeeze above that resistance breakout. And then the entire time we rode that bull rally, I told you exactly when the support was broken so that you could get risk off and lock in your profits. So with my next prediction that the bear market is over, and I tell you exactly why, these are proven facts, and while we can't guarantee it'll happen in the future, I'll take those odds any day of the week. So looking back at my track record, these are proven facts that we have nailed every step of the way, and we will continue to nail every step of the way because we are very objective and we are always going to follow what the charts are saying. So without a doubt, we are crushing this market, and I know each and every one of you on the Stocks channel Discord are absolutely crushing this market as well, and that is a fact. Also, thank you for all of you that are smashing that like button and help these videos reach 2,000 likes. So please don't forget to smash that like button and help this video reach 2,000 likes as well. Alright, so looking at today's price action in SPY, we were down 0.25%, and we did get the second close down below our 20 simple moving average and that support level at SPY 416, which is now going to act as resistance. So keep in mind the falling knife scenario means that we have no idea where we are eventually going to get the bounce. But today did tell us that we could be seeing the bounce as soon as tomorrow, because if you look at the volume, the selling volume is drying up and the candle body is much smaller, which tells us the selling pressure is getting exhausted. Anytime sellers get exhausted and you have a bullish structure of higher lows and higher highs, it significantly increases the probability we could get that bounce. And the likely areas to bounce to will be that resistance at SPY 416 and that gap fill at 421. Now keep in mind, based on the back test, our average drawdown in all of the bear markets previously is only down to about SPY levels of 406. So that is going to be a very attractive risk reward setup for the longer term investors that are looking for an area to load up and then hold their positions for long periods of time. As traders, I always tell you take it day by day and manage your risk accordingly. So how you use that information is completely up to you, but do respect the fact that this is still a falling knife while SPY is below 416. So you will want to get a lot more bullish once SPY breaks back over 416. Now I do believe there is a very good possibility that we are going to finish out this pullback and then still make another higher high. So I still do respect the fact that this is a bullish market structure, but we have no idea where this higher low is going to be. We could come all the way down to SPY levels of 400 to 390 and still have a higher low. So do understand what the concept of a falling knife is, and that is why you will want to watch that resistance level at SPY 416, because breaking above that level instantly tells you to get a lot more bullish. While we're below SPY 416, we want to respect the downside support levels at SPY 408, the average drawdown right around 406, and support right around 401. I'm not saying we need to go down to those levels, but right now, based on the price action, there is a very good chance we are going to test resistance as soon as tomorrow, and if we get rejected from resistance, you should be looking for lower prices. On the NASDAQ 100 triple Qs, we were down 0.08% today, so we went absolutely nowhere today in the triple Qs, and we closed right near that level at triple Qs levels of 314. So just like with SPY, we did see a drop in volume, and we did see a very small candle body, so without a doubt, there are buyers that are offsetting the sellers at this level, which does tell us we could see a bounce from this level as soon as tomorrow. If we start to bounce off above 314, you're looking for resistance at 317, and you're getting a lot more bullish if we start to break out above 317 for the gap close at 322. Remember, this is still a falling knife, so if we get the bounce and we get rejected from resistance, you'll be looking for the next leg lower at triple Q's 307.5. Keep in mind, we still have the bullish structure of higher lows and higher highs, so we're not getting bearish. We are just respecting the current downtrend in the short term because we're managing risk as traders. Longer term, I still believe you could be bullish, meaning if you are in an accumulation phase, you can be buying at any single one of these support levels because you're more than likely as an investor going to be holding for the longer term anyway. But as traders, respect the resistance above and then get a lot more bullish if we start to break above that resistance. In the Dow Jones, we were down 0.5% today, and the Dow Jones did close the gap below, which opens up the door for the gaps being filled to the downside to allow the bulls to bounce it up and fill the gaps to the upside. So for that reason, in the Dow Jones, watch this support level right here at the gap fill at 329. And if we start to bounce from this level, you're looking for resistance right around 331, 333, and the gap fill at 336. If we continue lower below the gap fill, below 329, look for a retest of 324 and then 320. And keep in mind, there is going to be a lot of support right around 324 because that is where we had the bullish breakout. In the Russell 2000 IWM ETF, we were up 0.16%, and just like the triple Qs, we are seeing sellers get exhausted at the previous breakout, and this is a bullish indication that we could see a bounce in the very near term. So for that reason, if IWM can hold this support at 191, you are looking for the next price target to the upside to be this gap fill at 194, and then above that you have resistance at 196. If we lose the support at 191, we could start to trend down towards that next support level all the way down there right around 182 to 183. So just get a lot more risk off if we break down below 191, but you can stay bullish and use this as a risk level as long as price action is holding above this support. On the ARK ETF, we were down 0.55%, and ARK came back down to that support zone right around 43. And so far that level is holding up as support, but I think you need to be very cautious in this ETF while it's below 47, even though there is a real possibility it is going to bounce and test that level as resistance before it goes any lower. So if support holds at 43, you could try to trade it to 47, but do not be a long-term investor in this ETF while it's below 47 because it's still possible it's trending down towards the 30s. In the VIX, we were up 1.22% as the VIX squeaked out a close just above 24, and as you can tell, the VIX is testing resistance, which means we do need to be a little more cautious if the VIX continues to spike from here. Now with that being said, the VIX has a huge gap to fill to the downside right around 21, so I do believe at some point in the near future we are going to see the VIX getting crushed all the way back down to 21, and then we will see if it's a higher low or if we get the bullish breakdown below 20. On Bitcoin, we're currently up 0.75%, still testing that resistance at 21,600, and if we break below support at 20,800, you're looking for a retest of 19,000. You can start getting more bullish if we can clear this resistance, but do keep in mind you're also going to have resistance right around 23,000. The next bull breakout is all the way up here above 25,000, so if you are buying at these levels, you need to be long-term accumulating, and I do believe that we are going to see the crypto winter ending soon, so this could be great times to start adding into your Bitcoin positions. Jumping over to our big tech hot stocks, we have Amazon today going up 0.3% and still holding above that support trend line right around 133, which is going to be your risk level in Amazon. If we lose support at 133, we could be coming all the way back down to 128, 125, or 123 to fully close the gap below. If we bounce from 133, look for resistance at 136 and the gap fill right around 138. And if we start getting back over 138, that will be bullish with the price targets to the upside at 144 and the resistance trend line at 150. On Microsoft stock, we were down 0.47%, and we see Microsoft still trending down towards that support at 274. That is going to be strong support at 274 and the breakout level right around 273. So if we hold that support, this will look like a bullish successful retest of the breakout, and then we can start trending higher to fill the gaps above at 286 and 296. If we start breaking below this support zone between about 272 to 275, just get a lot more risk off because we could be coming back down to 267. And if we lose support at 267, that will be extremely bearish. On Nvidia, we were up 0.86% as Nvidia is starting to bounce off of 170, and it does have a gap to fill to the upside just below 178. It's more risk off while we're below 180, so you can get a lot more bullish if we can break back over 180 with upside resistance at 190 and 196. If we close the gap and find resistance, that will be a lower high before we come back down to 165, and below 165 you will have support right around 161 and the gap fill at 158. Overall, I do believe you can stay bullish above 170, but you do want to get a lot more cautious if we break down below that support. Also keep in mind earnings is tomorrow after the bell, so I never suggest gambling through earnings. On Tesla stock, we were up 2.26% today, and Tesla did get a close back over the 20 daily moving average after bouncing from this support right around 870. You could stay bullish as long as we're above 851, but you will need to be cautious of a potential double top breakdown if we break below that support. So you're getting a lot more risk off if we break below 850. In the near term, it looks like we're going up there to fully close that gap just below 906, and above 906 we have strong resistance at 928, and above 928 you're looking for the bullish breakout to the price target at 970. On Apple stock, we were down 0.2% today, and Apple did successfully hold above the 20 daily moving average, but just below we have the gap fill at 166. So if we do continue to go lower, you are looking for strong support at that gap fill at 166, and you are getting extremely risk off if we continue lower than that. Below 166, we're likely coming to 163 and then filling the gap at 157. But if we bounce off this support right around 166, you are looking for the gap fill at 171 and a potential retest of the breakout at 174. On the financials, we were down 0.41%, getting another daily close below the 20 simple moving average and very close to filling the gap below. The industrials were up 0.19% today, finding support at the 20 simple moving average, and it does have gaps to fill above and below, so watch that support at the 20 daily moving average. The healthcare sector was down 1.4% today, breaking back down below the 20 simple moving average and likely coming back down to retest support right around 127 to about 126. The energy sector was up 3.61%, coming all the way back up to resistance just below 83, but do keep in mind it does have a gap to fill to the downside if we do see a rejection from resistance, and you want to stay bullish as long as we're above 78. So jumping back over to the S&P 500, while this is still a falling knife, it does look like a lot of the selling pressure is drying up, which could give legs for a bounce off of this support zone. Keep in mind you need to manage your risk during a falling knife scenario, but do keep in mind that we only have a little bit more downside before we get to the average drawdown, and that is likely going to bring in a lot of buying pressure if you're going to be bullish in the longer term and you're looking to accumulate as an investor. As a trader, be risk off below 416 and get a lot more bullish if we can break above that resistance, and always make sure you're letting price action do all of the talking. If you're looking for help trading following price action and getting better as a trader, consider joining the Stocks Channel Discord and join the trading community, which you can find out how to join the Stocks Channel Trading Discord community by clicking on the link in the description of this video. I also have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking for more information about Bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.